Marie, can you hear me? Can you hear me, Marie? Can you hear me okay? It said it was the audio was connecting, but I don't see it. Let me see. There you go.
There we are.
Hey, how's it going? You're cooking some dinner, huh?
Yes, ma'am.
That's okay. That's a-okay. It's always nice to put a voice and a face together.
Yes, ma'am.
So y'all are in Sulphur. Are y'all still hurting from the hurricane?
We aren't. We've finally gotten most of our stuff fixed. We have some sheetrock and some crown molding to finish up on the inside, but
it sounds like you were one of the lucky ones.
Yeah, well, we had half of the roof come off, so but
well, maybe not.
We were able to repair it, get a contractor in pretty quick and get things set up. So
right. I talked to so many people in Lake Charles and Sulphur, and I've heard some good stories, but I've heard some really, really bad stories, and it can be just devastating. Some people still aren't back in their homes.
Right.
So that's pretty sad. So you have 2 kids?
Yes, ma'am.
How old are your kids?
One is 18 and one is 11.
Oh wow. Okay, so one is almost out of the house, but you still have
graduates in May.
Oh wow. Yeah. Is he excited?
Oh yeah.
That's awesome. What's he gonna do?
He's going into computer science. Excellent. Over at Sewell out in Lake Charles.
He must be really smart.
Yeah.
And your 11-year-old is a girl or a boy?
Girl.
What's her name?
Haley.
Haley, okay. And she's 11. She must be in 7th grade?
No, she's actually in 4th grade.
Oh, 4th grade, okay. I'm getting my numbers out of whack. thinking I'm not adding correctly. So is Derek going to join us?
Yes.
Okay, hey, perfect.
Derek, you want to pause that? Or?
Hello.
Hey, Derek, how's it going?
Doing good. How about yourself?
Excellent. Oh, I'm doing fantastic.
Good.
Great. So I'm in Lafayette, by the way.
Okay.
So just down the road from you guys.
Yeah, all field city.
Yeah, absolutely. Although the oil field business is not going very well over here, we're having to pivot.
My brother's in the oil field. I know all about that.
Oh man, it's brutal. There's some people hurting over here because they just hadn't been working so long.
Well, the president that we have ain't gonna help right now, so.
Well, you can book your bottom on that.
Yeah.
I mean, what the first thing he did was turn the oil off.
Yeah.
So, awful. Right. Awful. What do you do for a living, Derek?
I work at Firestone Polymers. I'm an operator out there.
Oh, that's fantastic.
Yes, ma'am.
Marie, what do you do?
I'm do IT for a financial institution.
Well, that's where your son gets his smarts.
Yeah.
Absolutely. That's awesome. I'm going to close my door. My dog is barking.
Okay.
So guys, I always start my calls by showing my insurance license because I want you to know that I am who I say I am. So this is my license. It's upside down. This is my license for the state of Louisiana.
Okay.
I'm also licensed in Mississippi, Texas, North Carolina, and Ohio. So I'm helping families all over the place. It used to be before the COVID happened, that we used to go to people's houses and talk to them at their houses, like at the kitchen table.
Oh, okay.
But since the COVID happened, we kind of switched everything to Zoom, and it actually works out great because I can help more people,
Right.
So I wanted to kind of tell you a little bit about how all of this works. So I meet with a bunch of families every day, helping them with this kind of coverage. And most of the families that I talk to that are your age and with your good health record, most of them do choose to do a full payoff, but some of them choose to do just a partial payoff. And really, it depends on what you qualify for, number one, and number two, what your budget is and what you can afford to pay. So,
Okay.
as I told you when we talked the other day, is that I'm a broker. And so what that means is that I shopped all of my carriers. I have 40 carriers that I shopped, and I found the lowest price coverage to take care of your particular mortgage. Okay.
Okay.
And as an advisor, I help my clients to put a plan in case for what I call the worst case scenario situation, right? I mean, none of us want to think about it, but we're all going to go one day. And I know for me, when I go, I just want to make sure that my family is taken care of, that they're in a good spot,
Right.
they have a roof over their heads, that they have food on the table. And, I don't want any bank coming and foreclosing on my house. You know what I'm saying? So,
Right.
so that's basically what the mortgage protection coverage does, is it protects your home. And so what we're going to do today is I'm going to ask you guys a few questions just to kind of determine where the need is. And then I'm going to go over the options that I came up with for you and
Okay.
the strategy behind that. And then it'll be your job to pick a plan that it fits the budget and accomplishes what you need to accomplish. And then we're going to fill out an application to see if we can get you guys approved by the carrier, okay? Because nothing's going to happen unless the carrier decides that you're a good risk for them. All
Okay.
right. So, and it usually takes anywhere between 3 days to up to 3 weeks to get an answer back from the carrier because they pull medical records and stuff like that. And if it's slow, the medical records are slow getting there, it kind of holds things up, but it's usually not too bad. And there's no medical exam or anything like that. It's all simplified issue. So, but I did want you to know that this is not the old mortgage protection coverage. The old coverage, actually, the beneficiary was the lender. So the death benefit went straight to the lender, not the owner. But the new coverage, it'll go to you, okay? Tax-free.
Okay.
And it doesn't decrease, even though you're paying on your mortgage every month and your mortgage decreases, the death benefit will actually stay the same, so that you will get the same amount of money that you write the policy for. And and it's also portable, which means that if ever you move from this house, the policy goes with you. It doesn't stick to the mortgage.
Okay.
Does that make sense to y'all?
Yes, ma'am.
Yes,
Do you have
ma'am.
any questions so far?
That's it.
Okay, perfect. So I just want to go over a few things here. I've got your loan at $43,800. That's probably, not exact at this point, but somewhere around there. You've got it on a 30-year note and you're paying $285 a month. Is that right?
Yes, ma'am.
Okay, perfect. And is this a new purchase or did you refinance this place?
It's a refinance.
Okay.
It's actually a disaster loan.
Oh, a disaster loan. Okay. So this was the loan that helped you get your house back put together.
Right.
Okay.
Right.
So let's see here. So do you own your house outright, or do you have a separate loan for the mortgage?
No, we owned it outright,
Okay.
and then for the SBA, we had to put it in there.
Yeah.
As
Good for y'all. That's awesome. So let me ask you this: what was it that made you think that you might want to look into getting some additional life insurance?
Well, as far as like the protection on the house, that way if something did happen to one of us, or if we were, injured where we couldn't work, that kind of thing, it kind of protected the property and the house.
The house and that loan, so that you
Right.
wouldn't be liable for that money, right?
Right.
Okay. Now I have both of you guys working. Or one or the two of you the major breadwinner, or are y'all both pretty much contributing to the expenses?
It's pretty much equal.
Equal.
Yeah.
Okay. All right. So so as it stands today, if Derek's income went away, what would that picture look like for you guys? Would you be able to cover everything, or would it be difficult?
It would be difficult. Yeah.
Okay. How long do you think you could go before it would really be a severe problem?
I don't know.
A few months maybe,
Uh,
or
Probably between 4 and 6 months before it would be really hard to
really?
keep up.
Okay, all right. So, and so that's kind of what we're doing here today is we're going to put something into place to keep that from happening, right?
Right, right.
Okay, all right. I just needed to make sure that we were all on the same page here. So I'm going to show you guys the options that I've come up with and the strategies. As I said, for your age and your health background, the full payoff is probably going to be your best option. But if it's just not in the budget, then we can do a partial payoff. And what the partial does is it'll pay down half of the loan amount, and then it'll get your monthly payments down to like maybe $100 a month as opposed to $285. And you know, hopefully that would help out, you know, help the surviving spouse out to, you know, cover everything. But
Right.
but I'm thinking that the full payout will do it for you. So I'm going to share my screen with you, and also I have to tell you guys a little story, because this happened about a month ago. After we go through the options and everything, I want you to find something that's going to fit your budget, but I don't want you to have to think about things, because a month ago I had a couple. They were a little bit older than you guys, and we went through the options and they picked option 2. And then when we went to go start the application, they said, well, we just want 2 or 3 days to talk it over and think about it. And I was like, great, you know, this is a big decision, take your time. And so they said they would get back with me within a couple of days. So a few days went by and I got busy and I forgot about it. And then a week went by and I remembered about them, and I called, and the woman told me that the husband had a heart attack 4 days after our call. And he survived it. He survived it, but he can't work. Obviously, he has a physical job. He can't work. He doesn't know how long he's going to be out of work. They don't know what they're going to do, and he will never be able to get life insurance again. So
Right.
that's why I'm like, you know, if this is important and this is you know, something bad could happen, please, let's take care of it. So
Right.
that's all I'm saying. Okay, let's look at these numbers and see what we can do here. We're going to look at Derek first. So the carrier that I found for you, Derek, is called Mutual of Omaha. And they're one of the top 3 in the country. They're probably one of the most well-respected carriers out there. And so for the full payoff for you, it's for the $40,000, it's on a 30-year term. It's $30.22 a month. Okay.
Okay.
Now I added a couple of things. This is supposed to be a 3. I added a couple of things here just to show you how we can help in additionally. So first of all, option 2 is a living benefit. Okay. And what that means is, Derek, if something were to happen to you, like happened to that guy I talked to a month ago, this would help pay that note. Okay. So it'll pay $500 a month for up to 18 months. Okay. And it only adds a little bit to the full payoff option. So it would go from $30.22 to $38.02. And it's a disability or accident rider. So like if you were disabled, like with an illness, or if you had an accident, it would pay $500 a month to you guys for up to 18 months until you were back up and working.
Okay.
Do you have any questions about that?
No, ma'am.
Okay. And then the last option is the full payoff with a rider called return of premium. So Derek, you're 44 now, but in 30 years, you'll be 74. Okay. And so if you do not use this policy, this rider will pay you back all of the money that you paid into it.
Okay.
Okay. So, and that only adds $15 a month to that full payoff option. Now, if you like both of the riders, if you like the disability income and the full payoff and return of premium, we would need to write 2 applications. We'd have to write the disability income separately. So
Okay.
guys,
Okay.
huh?
Do you know what that would be a month or no?
It would be somewhere around probably $55 a month, maybe, for all of it.
Now, when you mean by if you don't use it, you get return of premium?
That means if he lives past the age of 74.
Oh, okay.
Yeah. So basically, this policy is a safety net for you guys. We hope that you will outlive it, right? But we just don't want the odds to go against you and something happen. We want to make sure that in that worst case scenario that you, Marie, will not be saddled with $40,000 worth of debt.
Okay.
So which one of those fits the need in your budget the best?
What do you think?
30 a month. 38 a month.
What do you think about the one with the disability income?
Myself,
That one is 3802,
something like
and they pay $500 a month up to 18 months for disabled.
yeah, 38.
Option 2 looks good for us.
Okay, perfect. Now let me show you, Marie.
Okay.
Yours numbers look actually very similar to Derek. So I've already explained it, so I'm just going to let you guys talk through.
So what are the stipulations on the disability part of it, the rider? Is there a certain, like maybe like dismemberment, or is it just if you're hurt at work?
No, it's if you're hurt or if you cannot perform your duties at work. If the doctor says that you cannot perform your duties at work, then it will pay out. There's a 30-day elimination period. So once the doctor submits documentation, 30 days later, you should start getting a check in the mail for $500.
Okay.
Every month for as long as it takes, up to 18 months. Now we can extend that longer. No, I'm sorry, a year. This one is 18 months. That's right. It's 18 months.
Okay. And that's the max is 18 months?
No, you can go longer. You can go up to like 5 years. We can run it through that way and see.
Do you know about what that would change the,
let me see. I'm gonna take off the share screen for a minute so I can pull that. Actually, yours is going to be $9.34, Marie.
for what?
For the disability. So let me share my screen again. So the disability part is $9.43. okay, to add to this $37.12. $37.12. Does that make sense to you?
Mm-hmm. And how long is that for, the disability?
It's for a year, 1 year, but we can make it longer if you want to.
Okay, so
I think this number right here is wrong. Let me change it. It's 37.12 plus 9.34. $46.46. Oh, that's what this is right here. And this is wrong. There is no return of premium here. It's just this. It's just the full payoff plus the disability. There, that goes away.
okay.
Because your policy is actually a whole life policy, Marie. Yours is different than I should have made that clear. Yours is different than Derek's. Yours is going to last. Yours does not term out. You will have $40,000 in death benefit until you pass away. And the reason for that is the policy that I ran for Derek, it's a little bit different. It has a build chart attached to it. So your height and weight distribution was past the build chart. So you did not qualify for that, but you qualified for this whole life policy, which actually is even better. And the reason it's better is because the whole life policy builds cash value as the time goes on. So, and it has a guaranteed interest rate of 3%. Okay. So it's sort of like building up a little bank account for you, and you can borrow against it anytime you want.
Okay.
So you like, let's say in 10 years or in 15 years, you know, one of the kids needs something and you don't have the money to pay for it. Maybe they need a new car or something like that. You can actually pull the money out of this policy and use that to pay different things, and you don't have to pay it back. You can if you want to, but you don't have to. What would happen is at your natural death, that money would just come out of the death benefit. Does that make sense?
Yes, ma'am. And that's 40,000.
Mm-hmm. That's the full mortgage payoff. But
Okay.
but that policy doesn't offer that return of premium.
Right.
But yeah, that disability income is cheap. I mean, it's less than $10 a month. So that's a pretty good deal. And that's, you know, that'll cover pretty much anything. Just as long as you're not able to work, and the doctor can vouch for that.
Is this the only company that you found with the policies that were reasonable looking?
These were the most reasonable that I found. Mutual of Omaha usually is for people your age, and they have so many different policies that it's a really good company.
Okay. Well, option one would be a good one for me.
Okay. So you want the full mortgage payoff, but no disability.
Right. My job is kind of, I can work from home. So if there's something were to happen where I would be, you know, in the bed or have to be at home and not be able to commute or whatever,
Right.
then there's a less likely that I would have to use that, because we can, you know, this past year in 2020, we work from home the whole time. So
You have an unusual situation in being in IT, because you're exactly right. You can be holed up in bed with a broken leg or whatever, and you can still use your computer. So I totally understand that. Okay, so we'll go with option one for you, and we'll go with option two for Derek.
now going back to his,
Okay.
you said the disability is for 18 months. Is there any option to extend
Yes.
that disability?
We can extend it to 36 months.
And what would that do to that premium?
Let me run that on my phone real quick. I have a little phone app I can run. Let's see. Term Life Express in the state of Louisiana. He is 44, male, non-smoker, 30-year term, 40,000. Disability, it's 30 months. I'm sorry. I thought it was 36 months. And for 500, and I can do less than 500 if you want to. If you just want to do the amount of the mortgage payment, I can do that. That'll lower it a little bit. Do you want me to do that?
What is it with the 500?
With the 500, it is $40.46. So it just goes up to 40.46. It's $2 more.
Okay.
Do you want me to run it at 285?
Sure.
Okay. $285 for 30 months is $36.06. And for the 18 months, it's $34.67. It's only like a couple of dollars difference either way.
Okay. Let's see. Is there a way to change the actual term? Say if we did a 15 instead of the 30, or you have to do the?
No, we can do that. I just did a 30 because you had the loan on a 30. That's going to lower it too.
Okay.
Okay, let's lower that to 15. Let's see, was that with the disability? Yeah, so a 15-year term with the disability income at 285 is $24.59.
Okay, what's the do the 15 at disability at 5 for
Okay.
30 months.
Okay. $30.39.
Okay, that's a 15-year term with
15 years,
the disability at
500
at 500 for 30 months.
for 30 months.
You said 30.39.
30.39.
And then my option didn't. It doesn't matter if it was a 30-year term or not, because it's
Yeah, because yours is a whole life policy, so yours is going to last forever until you're gone.
okay. What do you think about that? Yeah, let's do that. That 30.39 option for
Okay,
Derek,
perfect.
and then the same option that we had earlier for me.
Okay. All right, let me stop share my screen. I'm gonna pull up the application and we'll get that going. Okay. And what I'll need from you guys is your social security number, a driver's license number, and then whatever bank we're gonna draft the payments out of. I'll just need the banking routing number and account number. And then you get to decide on which day you want it drafted.
Okay.
So you might want to grab like your checkbook for the. Okay,
And I
on
guess
that
his
up.
driver's license number and all that. All right, whenever you're ready.
I'm not ready yet. Not quite yet. Takes me a second to get my thing pulled up, so my apologies. Okay, so I guess we'll do Derek first. No, we'll do ladies first. Oops, what just happened? Start a new case. Okay, we'll do Marie. Okay, so Marie, your birthday is February 5th, 1980. 1980. Female. Let's see, G. All right. The spinning wheel. That's the most frustrating part of the application is that stupid spinning wheel. Takes forever. Okay, so this is my info. All right, let's see here. Do you have a middle initial, Marie?
L.
L, okay. And I'll just need your social security.
439-41-0323.
Perfect. Okay, and your height is 5'6". Now, what would you say the last time you were at the doctor, what do you think your recorded weight was?